Hello, everybody. It was another mellow session overall for the stock market, but considering how we were looking post the attacks in Brussels, we had an actual pretty decent session overall. The NASDAQ and the NASDAQ 100 actually finished higher on the session. Volume was lower than the session before, so once again, we're seeing the exact opposite of what you want to see during an uptrend. So I remain extremely cautious and continue to take a very measured approach to my end of day trend following long positions. This still remains a very short-term market. If you're going to take large positions, focus on intraday moves, having tight stops. That's about all I can recommend right now with our current uptrend. The NYSE, the S&P 500, it barely pulled back today, but it was a decent pullback. Volume was slightly, I guess it was about the same as yesterday. I have to go look at Investors Business Daily, but or MarketSmith, I guess. But Telecharts shows that volume was slightly above average. Not above average, excuse me, slightly higher than the day before on the S&P 500, but it's not really a clear distribution day. There's a pretty nice intraday reversal off the lows, and we didn't close extremely ugly, so I wouldn't say that that's anything bad. However, we have green bop now on the NYSE, and like I've always said, green bop in any of these indexes has never been good. Just as you can go back here on the NYSE, get green bop back here, we have a downtrend. Get green bop back here, we have a downtrend. We have a lot of green bop up here. We kind of go nowheres, kind of into a downtrend. Green bop right here, downtrend. Now we got green bop again, so I assume it's time to pull back. Now, if we pull back and don't sell off that much and then resume higher, that's going to be extremely good. But confirming the NYSE is the Dow Jones Industrial Average. It's now had 3 green bop days in a row. Now going back here, let's do the same thing. Green bop back here, sell off, but then we started to move higher again before basically going nowhere. Green bop back here, we went higher for just a little bit, then we sold off. Green bop back here led to a sell-off. Green bop back here led to nowhere, then a sell-off. Now we have green bop again. So they're never good to see on the indexes. It's actually a contrarian indicator. So I would expect stocks need to pull back here, which is why, once again, I keep all new long positions super small with super tight stops. We're still not quite getting the great signals. How we're going to get those great signals is if the market decides to pull back here or just move sideways, whatever it wants to do, go trendless, and then breaks out higher. We'll probably get higher signals, but we're still not getting them. A few stocks I flagged today, SPWH. It's breaking out with the pocket pivot point signal, but once again, did price touch its 20-day moving average today on that breakout? No. So it's a riskier buy, up 4%. I mean, before you even know you're wrong, you got to risk 7%. Good breakout, but this stock, as you can see, it's not a smooth uptrender. It likes to be really choppy, so I wouldn't necessarily chase it here. Then there's OMEX. I like the chart pattern on short term, but once again, where's that 20-day moving average? Nowhere near price. Then there's LLL. Problem with LLL today is that it needed to close above 119.57 for me to consider it as a new long position, coiling off the 5200-day moving average. But once again, close but no cigar. EPOL, pretty nice. I like how BOP is increasing. There's not a huge volume surge here. The world market indices, all ETFs, all look the exact same. But there is one new long position I am going to take tonight, and that's NORW. This is a FTSE Norway 30 ETF. You can see it's had max green bop ever since it had its one powerful up day on strong volume. It's had accumulation bars since then. One red bar here as it found a low with an intraday tail and rallied higher. But the important thing is that it's had max green bop the entire time. Huge volume surge today with the pocket pivot point signal. I wish it would have closed closer to 1012. If it would have closed at 1009, that would have been perfect. And of course, like always, I wish it would be touching the 20-day moving average. If that's the case, this is the kind of signal, even in an ETF, I would easily push it because our risk is so low. Our first cut loss level is 994. My final cut loss level is 973, but you can even use 956. But I don't think I'd want to be, with this move today on this volume surge, there's no way I'd want to hold it. If it does pull back and it fails, I'd rather it re-trigger a long signal than hold on all the way back to 956. But NORW is the only high-quality long position. It was in my BOP scan, max green BOP scan, ETF scan, and confirmed in my price volume BOP scan. So it will be a 3% long position. If it would have been off the 20-day moving average, it would have been a 5% long position. And if it would have been a stock off the 20-day moving average with this kind of chart pattern, we're now looking at a 10% long position. But that's not what we have. Now getting to the sells, AMC is a full sell, 100%. I knew it was a more of a riskier buy. I was kind of hoping AMC was going to just break out right here, immediately follow through off that pocket pivot point volume surge day. But I knew that the base was very short, said it was risky, and sure enough, kind of failed today. Pattern overall is good, so we'll wait to see if this thing can base out again, give another pocket pivot point signal entry. But for now, it's just got full sell. Just want to cut my losses, keep them very small. And then also today, AGRO, ugly move below the 50-day moving average. That's another 50% sell on an end-of-day basis. I am now moving up my final sell stop to today's low a day. So 1130 is my final sell stop on the entire position. And then GENC, speculative name, failed its 20-day moving average today on above average volume. So moving up half my sell stop to today's low a day, 1309, with the last remaining still currently at 1210. But I assume that level is not going to come into play unless the stock crashes in one day. I assume we'll get a full sell signal before that comes about, so that'll once again be extremely tiny losses. And then EDUC, once again, closing below the 20-day moving, another one, closing below the 20-day moving average and above average volume. And 1164 is below the signal date's low a day open of 1170. So with it closing below the open of 1170, that now means that I move my final sell stop to the 20-day moving average failures low a day, which today is 1128. So if the stock touches 1127, I'll be knocked completely out of it. I think I currently had it like at 1080, so it gets raised by $1, so we can keep the losses extremely small. But there's also a little bit of house cleaning. MSG also, I got shaken out of it intraday yesterday. Green BOP is shown back up today on a lower volume pullback, so now I'm going to reset my buy stops of the original amount of shares just above 163.01 at 163.02. And then two very speculative names just to keep my toes in the water, because MITK, I should have been long back here. I passed on it here. It's now up 7%, but today it's giving a pocket pivot point signal on above average volume. BOP isn't that good. This was in 0 of my scans, but I always, if this volume is light like it is today, I constantly go through this scan that just looks at stocks that are up on the day on above average volume with green BOP. Doesn't care about the level of the volume or the amount of shares traded. And MITK was in it. So MITK used to be a can slimmer, used to be an earnings winner back in November. So I'm figuring that what I'm going to go ahead and do with it is take a very small position, 0.5% of my account capital only. It's just a test to make sure, because I just don't trust anything. Like I said, once again, is this stock touching the 20-day moving average? Of course it is. And so the breakouts, the pattern is too short for a breakout to be 100% certain it's going to work. So I keep a small 0.5%. And then CVGI, that's beautiful off the lows. That's a huge volume surge, an extremely big BOP surge, and price is closing in the upper end of the range. Unfortunately, at 258 closes 4 cents off the 262 high. The low a day was 243 and the open was 247. That's also 4 cents, so it's about even. For this to have been a better long position, it would have had to close to 259 or above, preferably above the 10-day moving average, because if we could have gotten it above the 10-day moving average, it would have been a pocket pivot point signal. So as it is, it's kind of a speculative name. I was going to do 1% of my account capital, but I believe if I even use half my sell stop at 243 and then the other half at 221, that still opens me up to too much of a dollar risk that I want to risk in speculative names. So I'll go smaller. So if it's like 1,500 shares, it'll probably be something like 1,000 shares, for instance. But CVGI is going to be a 1%er below, so it's going to be somewhere in between 0.51, 0.75. It's speculative. This isn't a raging bull market where I just have beautiful patterns everywhere and everything is working and producing big gains immediately. So I'm going to continue to trade cautious. So CVGI, tiny. MITK, tiny. You don't risk much if I'm wrong on MITK. The only sell stop's 581. NORW is the big one, 3%er. Could have been a 5%er, but it's not. The basing pattern isn't long enough and it's not bouncing off the 20-day moving average.